What are you making of all the noise around Chinese tech, and do you think valuations are now looking attractive?
Yeah, obviously this has been ongoing for some time now, and we feel that the market has definitely started to absorb a lot of these issues. So I guess the real question is that margin of safety has now lifted, in terms of where the valuations have come to, and there are a number of I guess areas where is going to be problematic for some time. Clearly, the K-12 market in the education sector is going to continue to have that weight sitting over it. However, we do think that some of the other areas, probably are creating a bit of opportunity at the moment. We've had some clarifications around this shouldn't impact other parts of the market, and if we look at things like, say, vocational training and those type of areas, that's where we might be starting to see those opportunities. So it's really about the disconnect where the valuations have been impacted, and where you think the fundamental, impact on earnings going forward will not be quite as dramatic.
There was also talk about how murmurs in the market about how the next sector, the next frontier would be healthcare to receive, more regulation. What is the thinking on that front?
Yeah, this is an interesting one of the debates we have internally. Obviously, the healthcare sector has had regulation for sort of some time. Again, we know this is a global phenomenon where trying to make sure we do have access for all, and also that at a reasonable cost. So for us at the moment, it is something we do keep a watch on, and there's not just one sector within healthcare. There's device markets, there's pharmaceuticals, and we have seen there has been quite a lot of pressure around particularly the more generic part of the market, and keeping those prices down. So I don't think you're going to have as dramatic an impact across the sector as we've seen, potentially in things like tech, but it is something to keep a waiting watch on.
Ideologically, Joshua, I do want you to react to what Ray Dalio put out on this particular issue on LinkedIn in a post. He said, to understand what's going on, you need to understand that China is a state capitalist system, which means that the state runs capitalism to serve the interests of most people, and that policymakers won't let the sensitivities of those in the capital markets and rich capitalists stand in the way of doing what they believe is the best for most people of the country. Having said that, I do think that this is unfortunate that the Chinese policymakers don't publicly communicate the reasoning behind the moves more clearly. Do you think this was to boil it down to specifics, it was really a communication issue? If they had handled the communication and the PR better, that the damage would have been limited?
Well, I think this is one of those different areas. I think governments generally are not. They don't put the capital markets first. I think that's the same anywhere in the world. And I think if we have a look at what's been happening around some of the the inquiries into the big tech companies in the US, we're seeing a similar result on what's been happening to the share prices. I guess the difference is in some systems we wait for court cases and the outcomes there, and then we see the impact on the stock market. And in other countries, it's more around when the sort of policy happens. So yeah, look, as investors, we're always looking for certainty and communication. But from a perspective of policymakers, they're trying to look for the best outcome. And I guess those inconsistencies are what create volatility in the stock market. And you can either not like that, or you can look at it as an opportunity. And I guess as stock pickers, we try and look at the latter.